Hey guys and gals, this is Blake Morrow. You are listening to the Morning Edge. Sorry, I'm running just a minute late. As we're getting more and more people back from holiday, especially in the Forex Flow chat room, I just want to make sure everybody's aware that we're doing the Morning Edge. It's a new uh, sorry, I'm looking for my glasses. It's a new kind of step in your day for a lot of people. So because of that, huh? Sorry, guys. Let's see. Hold on really quick. Let me do something. Dun, 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 dun.
Welcome back.
I'm missing my live squawk. I'm not sure what's happening there. So we're gonna have to figure that one out. Okay. Okay. Raj says, play, put your glasses on. We can't hear you. All right. Well, as we try to figure that out, let's go ahead and get moving here on our analysis. So what's happening today? Well, first of all, you see stocks are coming off a little bit right here ahead of the open. The Dow's coming off a little bit from the highs, and then the Nasdaq's holding up, but the S&P's rolling over just a bit. Obviously I'm not bearish equities right now, but we are near the upper end of our wedge, so I wouldn't be surprised if we start to see a little bit of a pullback, right? Especially with big data coming up this week. How's that going to affect currencies? Well, I would think that you're going to see a move lower in maybe some of the yen pairs and maybe some of the emerging market currencies. So yeah, this is something to think about. Okay. Let me go ahead and take a look at, well, let's just kind of start buzzing through the charts here. So let's go over to the euro dollar and we're going to get started. So with the euro, 127% extension is capping thus far. So we're going to pretty much write down the same numbers as we did yesterday, I'm pretty sure, right? So let me just pull up those numbers. Twitter for now. All right. So we wrote down 1845 and 119, which 1845 capped us, right? We're back at it again. 119 is the 618, 88% confluence. No, I'm sorry, 38% retracement, 161% extension. So same numbers. 1845. Amanda said we have live squawks having server issues right now. That's the reason why. So just letting you guys know. And thank you, Amanda. Appreciate it. If she's listening in right now. We were just asking our team like what's up, and she just reported back that. Okay, support with the euro dollar. This is where if you're long euros, you need to be real careful, because my opinion is if we break back through this 117.75, then obviously we have some support here at 118, but if we break through this support, this is where bulls go, shoot, we could trade all the way back down to 117. So, 117.75, I think is and I know we have some support at 118. I know that. I understand that. But this is, we start breaking below yesterday's lows, and then this little low here, like I said, it shifts. It's kind of like a shift of gears, if you will. So I think, if you're bullish and you're constructive euro dollar and you think it's going to 119, 119, 119.50, you're fine. Unless we break below 117.75, then you got to be thinking, maybe I'm on the wrong side here. So I think it's kind of tricky personally. I think, at this stage, when you are trading during the end of summer, right? And the liquidity is really poor, and it's non-farm payroll week. So that, it's not a great idea to make a big stand in the market, right? So for me, if I can find a quick 20 or 30 pips, that's cool, right? So let me ask you this, and you guys can answer me really fast with the euro. And I'm going to ask you this question. I'm going to move on, and I'm going to come back to the euro. So you guys know, for those of you that have been with me forever, I like to do this to you. The last thing I want you to do is to listen to these webinars and go, what was that support resistance level Blake just said? Oh, great. You know what I mean? I don't want you doing that. What I want you to doing is thinking about things, thinking about your options here. So I want to ask you, if it's a low liquidity day, and we know non-farm payrolls on Friday, we don't want to get too entrenched in the market. We don't want to take too big of stabs at the market, and you want to make a quick 20 or 30 pips. Where do you think you can make it here, looking at the euro? You guys can answer that question. I'm going to come back to it after I go through some other charts. I'm going to tell you exactly where I think you can make a quick 20 or 30 pips today, if it comes to fruition. So look at the euro. Tell me what you think. All right, sterling. So 138 is obviously resistance, support. I mean, we can get rid of this. Let's just get rid of this trend line. It doesn't matter a whole lot. We've been up and around it a lot. So I don't know where it's at, or I don't know. What I want to say is, I don't think that trend line is very important right now. 138 and intraday support. I think we wrote this down yesterday. 136.75. 36.75. 138 range. I'm gonna keep euro on range right now, because we could be doing this. Let's just let me go back to the euro really fast. Let me just do this really quick. I was just thinking out loud here. Something like that. All right, so I'm going to keep us in range. Aussie bullish. We're above the, well, I'm going to keep us, actually, I'm going to put Aussie back in range, or keep it in range, because we really need to get above 74 cents for me to get too excited about the Aussie. But look at the 78% retracement coming into play. 73.59. And 74 cents. Boom, boom. That's really important resistance, right? Support, 72.90. Right? Kiwi. It was easy to be bullish the last few days. Today, not so easy, because we're getting close to that 71 cents, and really 71. by the time we get there, 71.40. So I'm gonna keep it. I'm gonna actually just flip us over to range. Just keep us on range right now, because like I said, it was the Kiwi was an easier be bullish when we were down here, but now that we're back here, it's not as easy. So I think we've got to have a bullish. Hold on. So what is that? 69.90. So maybe instead of green, like this, like bright lime green, maybe we can make it not so lime green. Maybe we can make it like dull green. Maybe we can make it like lemon lime. Maybe we can make, I don't know. Anyway, I think I'm flirting with bullish and bearish, or bullish and range right now. But like I said, it was an easier call lower to put the Kiwi in bullish, but now that we're here, it's not as easy. I still think it's outperforming, but yeah. Okay. The dollar Canadian. So by the way, crude's coming off right now, and you got to be real careful with the dollar Canadian, especially that we're holding the support. I was actually thinking yesterday, right? Here's the last move higher. I was thinking yesterday we were going to break down and then, get down to the, possibly 124 and change. But you know what's happening here? It's not breaking down. That's the thing. I'm still going to write down support at 120. I'll write at 125.30. Was that 125.30? 125.35. Yeah. I'm not going to write down a lower support though. 125.35. And then frankly, if we get above this resistance, we get above 126.50, we're going to see 127.10 again. So I'm going to go back to the, no one actually answered me. You guys really not going to answer me? You guys not going to answer me when I said, where's an easy 20 pips in the euro dollar? You're not going to answer that question? Or I said, if you're trying to figure out where a quick 20 pips are going to be made. Brand says, I'm here. I don't see where to get in easily or safely. Okay, look at the euro dollar. And look, yesterday we hit a high at 118.45, right? Or 40, whatever. And remember, this happened after, before or after we wrote that down, because we knew that was 127% extension. We pulled back to 1.8. Well, actually, we went to 117. 117.80 yesterday, then broke and went up to the 127% extension and really held 118 again. So that support and resistance that we talked about really held yesterday. And guess what? If we break this resistance right here, in my opinion, this is a quick 40, 50 pip move. Can you scalp 20 pips out of that? I think you can. Because you're going to get some stops getting triggered above those highs. So, and we might actually be there shortly. So anyway, just some food for thought. Look, and look at this little trend line here that comes through. It's capping it. And now I'm not saying that it's going to break. It may not break, but if it does, we might be able to capture a quick 20 pips out of that. Dollar does look weak though. We have ISM data coming out, and if it's going to happen, it's going to happen in, I think if it's going to happen, it's going to happen in 28 minutes. So let's get to the rest here. Swissy. Yeah, wait, really quick. Yeah, going back to the euro. Doesn't mean you have to actually buy it at 118.50. You just let it trade above 118.50 for a little bit and see if it's going to hang out above that. Then, we have a 50 pip move between 118.50 and 119. There's if the momentum gets going, for you to be able to squeeze out 20 pips from, like, let's say 118.60 to 118.85, 118.90, that's where you do your damage, right? Doesn't mean you have to buy a breakout. I think a lot of people get, they're like, ooh, we're above there, gotta buy it. That people get stuck in that mindset. And I don't, because you get a lot of false breaks. So you kind of wait till you get a sustained break above certain levels, or lows or whatever. Okay. Anyway, back to it. Let's get through these charts really quick so I can give it to Steven Stelios. 91, 92, nothing's changed there. And guess what? We're going to almost be range bound in all of FX going into today. Dollar yen, big reversal, right? From 110.42. You guys, 2 hours ago, you guys did get that, update of that chart when it was right there at 110.32, right? I mean, we are down at 109.91 now. I mean, $110.40 support, 109. We've been writing down 109.60, but today it's 109.65 roughly. Remember, it's an ascending trend line, so it's going to be dollar Norway. That now we held the 50% retracement, and if we get back above 873, that's a false breakdown. With crude weak, I have to say keep this one on the radar. Okay, so I'm going to write down 862 right now. 862. I am going to designate it as bearish because we are below 873. But hold on. If we get back above 873, it's going to squeeze. And again, with crude oil as weak as it is, I think it's something you have to keep on your radar. It's possible. Okay. Dollar max. I picked up some dollar max a little early. My cost average is at 20.03, but I plan on actually getting a little aggressive down here. So once we complete this double top, I plan on being a little bit more aggressive. I've got like half size right now. So I'm going to probably add to the rest at 1991. Because I think we're at the upper end of the stock market range. You saw the S&P, right? So if the stock market starts to come down by the end of the week, dollar Canadian or dollar Mexican peso should rally off of this support somewhere down here and back up towards 2030, 2040. So I'm just playing this range, big range. Now, resistance today is 2017. Keep it in range. Dollar index. Well, I guess that inverted head and shoulder pattern ain't going to work. I mean, what is the crappy US data? It's just crappy. Let's do this really quick. Okay. Okay. Sorry for the yawn. It still is, no matter how I slice it, it's still 6:37 in the morning where I'm at, and I've been up for 3 or 4 hours. So 3.5 hours. So I'm going to yawn because it's not natural. Damn it. It's just not natural. 92.15. That's going to be channel support. That's going to be big support. So we have 92.40, then 92.15. So I'm going to go 92.15 asterisk because that means it's important. 92.40 range. I know I hate being in a range too. 92.80 is resistance. Okay. Gold, silver, S&P. Okay, so here's the S&P. You guys know all the numbers really. Well, 4,500, right? And then below that is well, first of all, let's just write down 4,500 because that's going to be support on the way down today at least. And then really below that is 44, 25 maybe. That's like super important. That's why I have multiple asterisks there. I mean, it's going to be, by the time we get down here, it's going to be somewhere down there. If let's say the stock market just imploded, today for whatever reason, imploded. I mean, let's say it dropped 1% and we got down here. That's going to be pretty key support, right? Resistance 45. Now it's 80. This number goes up every day too. So 45.80 is bullish. Whew. Okay. Sorry. Excuse my yawning. Silver, strong. 24. Remember, this is previous support. So 24. What do we write? 24.45. What did we write? 24. Why did I write 42? So why didn't somebody help me out? 24.50. Okay, that's what I meant to write. Type 24.50. And support will be right here. Well, right now support's right here, 23.75. Why do you keep writing 43? Maybe because subconsciously that's where I think it's going. Right, Stelios? I keep typing. I keep typing 43 for silver, so maybe it's really going to $43. That's what I think is going to happen eventually. 1825, 1835. So we have two levels of resistance, but I mean, we can write them both down, but we don't need to, but you can. And support will be, what's interesting is that dip right back down to this trend line held. So that means this dip back down to here, that high, which will be the trend line once again. I mean, we can write down 1800. I'll write down 1795, but I know yesterday it was we probably wrote down support as being 17.7, but based on the price action yesterday, oh my God, the dollar yen just continues to get demolished here. Wow. Are yields dropping? Oh yeah, they are. Yeah, I guess they are, but whatever. It's all pre-non-farm payroll stuff. Bitcoin. Same. 40. Well, actually, we should probably write down this, but we'll write down 43.5 or 43. What is that? 43. I guess it's 43.8 and 50,500. By the way, I am long Ethereum. Just so you guys know, I put in a pattern in play yesterday, but I actually bought it yesterday too. So 3, 5, 43,800. 800. Anyway, somewhere around there. Let's see. What do we have written before? 46,300. Huh? 46,300. Oh, I wrote down this number yesterday. Well, that's probably right. Actually, you know what? Let's do that for now because it's holding us up, and you can see how we're just making higher lows there. Very, very so small, but so 46,000. Was it 300 or 500? 300. Okay. All right. Bias chart is finished. And isn't that just so beautiful? Steve, Stelios, look at every currency pair minus Norway.
I wouldn't call that beautiful, but yeah, okay.
Oh, it's so beautiful. Range bound. Isn't that awesome? I love range bound. I'm just kidding.
This is the.
I'm so sarcastic right now.
This is the normalcy, right? Isn't it?
I mean, this is at the end of August in the summertime.
Why was the vast majority of the post-COVID era different?
Well, I mean, yeah.
I hate it when he's right.
Yeah, I know. Me too. Steve, why don't you go home? You are home.
I have news for you. I am home.
Damn it. All right. Well, hey guys, a couple pieces of news for you. For those of you guys that are listening in, in the ForexAnalytix community, and you guys want to hear something cool. I'm going to do another interview with Brent Donnelly in 2-3 weeks. But we're going to really talk about, I'm going to share with you. We are going to talk about either his top 5 trading rules or top 5 trader traits that he has. So it would be cool. It's going to be good. And so I'm excited about that. So anyway, we have a lot of interviews actually coming up in the next few weeks, but just wanted to let you guys know that it should be fun. Anyway, you guys have a great one. I'm going to go make my kids some breakfast and go feed my dogs, or, I'm going to go
do what you got to do.
Make my dogs breakfast and go feed the kids. No, I don't know what I would do.
Or feed the kids to the dogs.
So maybe I could feed the kids to the dogs. No,
that actually solves two problems at once.
At least one of the problems, right? All right, guys, have a good one. I'll see you in the chat rooms. All right, see you guys.
Okay, mate.
See you, mate. So, like we said on FACE, currencies are very indecisive. Metals are moving a little bit. Silver is up over 1%. The cryptos are still going higher, and why not? Because
why not indeed?
They're not going to be tightening anytime soon, at least. Otherwise, we remain in a holding pattern, like the planes do, and we are waiting for Friday. I hate this. Every week, it's like, oh, we wait for this. Oh, we wait for that. I don't know what we can do about it, but
it's just excuses. I mean, the Fed is trying to persuade everybody that everything is data dependent, which it isn't. Because it's funny because they're trying to persuade us that this is the most data dependent period that we've had lately, when it's the exact opposite. If we were data dependent, for example, we have the most important data that has to do with central bank policy and actions, inflation, which is clearly at a very alarming level. Do they do something about it? No, they don't. Supposedly, labor market plays a role, but no matter how low employment goes, they will claim that there's still slack in the job market. They'll be right about that, by the way. But in any case, they would do so. So, theoretically speaking, we're going from data to data, but practically speaking, none of that will play any role.
Yeah.
But you know how it is. It's like market participants, like headless chickens, are just running behind, whatever the Fed claims is important. That's a problem.
True. But I don't have much more to say. I mean, it's again one of the same, and we just wait. We're trading in relatively tight range, especially yields. And I wish I had something interesting to say, but for me, big picture is unchanged for weeks now.
Yes, that is very true, Stelios.
And 10-year US below 130 again, yawn, and as long as that's the case, then I don't see equities going down, at least not more than a few days. Yeah, I don't know if you want to have a look at something. I have absolutely nothing to say.
Yeah. Ethereum is breaking out. That's one of the technical developments that have happened during the past few days. We talked earlier about the USD yen. From what I understand, Blake spoke about it before I joined in the webinar, but my focus is there as well. We made an attempt earlier in the day to break out from this descending channel. So far we're getting rejected, but it's still too early. Of course, for this to play out, as you very well said, Stelios, it's the most yield sensitive pair. So we need to eventually see a breakout in, for example, 10-year yields that are still consolidating in a corrective pattern. In my opinion, most likely a corrective pattern lower. Now, of course, timing when this corrective move is going to be over is not an easy job, but I feel confident about what the outcome is going to be, irrespective of how soon it happens. Now, equivalently, I showed when I was on vacations, I talked about all the yen pairs, and from what I understand, Blake is paying attention to them as well. Euro yen testing this channel trend line resistance as we speak. So at a critical juncture, technically speaking, it has to make a decision here, if it wants to break higher or it wants to get rejected and continue within this, corrective formation. Speaking about the pound yen, not exactly on top of the trend line resistance, but as you see, definitely not far away from it. We are like just a few pips. Currently testing the 200 daily moving average, the 50 daily moving average, and this horizontal support resistance area, with the trend line resistance being just a few pips above. So we break above that and we're on our way higher. Also pay attention here to the bigger channel that we have, the green one, right? As long as this is holding, there is no technical evidence for somebody to be bearish in any way, shape, or form. Now, the Aussie against the dollar has broken out. We showed that a couple of days ago when it was attempting to do so, and the Kiwi is also having a very, very strong rebound higher, now approaching once again the previous rectangle trend line resistance. We're just like 20 pips away from there. The reason I'm showing this is because if we switch to the Aussie yen, you'll see that the Aussie yen has broken out as well. Speaking about this descending channel that defined the downtrend, and the Kiwi yen is also breaking out, right? Both of them developments of the last 24 hours. Kiwi yen broke later on the day yesterday, and Aussie yen is breaking out today. So, clearly we see the USD yen breaking that channel that we talked about, then we should be looking at a much, much bigger move to the upside. And, keeping in mind the bigger picture, the medium-term trend at least was higher in any case. So all these look, quite healthy to me. And, it looks like there is a decent more upside coming. Now, I have literally nothing to say about equities. We had a pin bar yesterday, an indecision day, probably more of a breather. We have a doji pre-market so far, an inside doji today. So, we're just consolidating our previous gains. I have absolutely no reason to look at it in a bearish manner. The Nasdaq, oppositely from the S&P, is pushing higher pre-market today. No surprise there, no surprise whatsoever. As we've said, several divergences, so on and so forth. But really, I mean, you need a lot more to be short this market. That's the only thing I can say. You know, you can always find, and I've been saying this for quite some time now. You can always find technical excuses to be short. Here's a 4-hour chart of the S&P, for example, right? So you can have the technical excuse of saying that, oh, here it is, the S&P is trying to break down from this little ascending wedge, right? We also have RSI showing that it's about to roll over, right? So that's it. I'm going to be short against the highs. Yeah, you know, it might work if you have like a very, very conservative downside target. But, you know, as I've said, shorting this markets, even when the risk reward seems to make sense in the short term, will probably, you know, lead you to die a death by 1,000 cuts, right? Now, if we want to focus a little bit shorter term, look how the DXY backtested twice the previous support area and gets rejected. So if you look at the DXY, it looks really heavy, and it looks to me like the dollar wants to continue lower, which is another indication that equities might just remain well bid. So looking for lower dollar, looking for equities to remain well bid. You know, nothing has changed in both regards. Now, having to do with the rest of the assets, here's gold. Here is silver. Silver is kind of making an attempt to break higher today. Gold has broken out and is consolidating. So both of them seem, I mean, you can be cautiously bullish, both of them, right? Especially gold because it has already broken out, and silver if it does close above that channel on a daily closing basis today, so in a few hours from now. But, you know, still no solid, clear evidence that, you know, something technically important is happening here. And more or less, that's a synopsis of what I had to say. Now I'm going to be more than happy to, let me open the chat box to have a look at whatever you want us to look at. Norges Bank ended their last COVID-19 related liquidity program on last Friday. The so-called F loans. F loans provided an unlimited access for banks to borrow from Norges Bank. Total 200 billion of NOK has been lent, and all of it has been paid back. Norges Bank has, by this, ended all their COVID-related programs and is back to normal, just for info. Then we will have interest rate hike this month. You know, we've said it before, and that's one of the reasons both Stelios and I are very, very bullish the Norwegian kroner. The Norwegian economy is one of the few economies that is truly not, you know, artificially or, you know, wanna be or claiming to be healthy economies, right? And that's what's going to make them always the first to try to normalize. And trust me on this, if global monetary policy was not just simply insane, Norway would have much, much higher rates, but they're in essence forced to have a much looser monetary policy than they would want, because with everybody else, you know, being on a race to minus infinity, having to do with real rates, you know, it would be a big problem from their side if they completely ignored monetary policy all around the planet and they just try to normalize like everything was normal all over the world, right? So, you know, they're going to be the first to act in the right direction, but still they're going to be very conservative in the way they're pushing to the hawkish direction, because, you know, as an economy, as a currency, they have to compete with the rest of the economies on the planet, and the vast majority of the rest of the economies on the planet are just, you know, doing what they're doing because, simply put, they're all completely bankrupt, especially projecting, you know, a few decades down into the future. Like, from how many countries do we have? Like 200 and few, 200, 202, 203, something like that. We monitor, if I remember right, economic data for 197 of them, something like that. Let's say from the 197 we monitor economic data, 190 at least are completely bankrupt, projecting into the future. So, you know, they have to adjust their monetary policy to, in essence, masquerade, you know, the reality and make things appear. It's like putting lipstick on a pig, right? That's what central banks are going to do, are trying to do, putting lipstick on pigs. And, you know, keeping the pretense going that everything is okay and everything is under control. Just grab scalper, just grab your turn. Yeah, that posture. Base metal prices on the London Metal Exchange and Shanghai Futures Exchange were generally weaker on the morning of Wednesday in the face of further. Still, Stelios, in your view, what is the Fed trying to accomplish with these policies? Also, how do you inflate away debt? If you owe 5,000 and the price of everything goes up, you still owe 5,000. No, that's not true. That's not true. If you owe 5,000 and the price of everything goes up, it means that the price of money goes down. And don't forget that you don't borrow money to repay in tangible goods. If you borrowed money with the promise to repay in tangible goods, then yes, inflation would not make your debt go away. But inflation does make your debt go away when your debt is, as in almost every case, in terms of money, because $5,000 today are not the same as $5,000 10 years away, right? Because the purchasing power of $5,000 today is going to be much higher than the purchasing power of $5,000 in 10 years from now. So that's how they're inflating their debts away, right? By decreasing the real value of the owed amount, right? They can't decrease the nominal value, but they can decrease the real value. And since interest rates are artificially manipulated to be low, like there is no inflation, the real interest rates are oscillating constantly in negative territory. And now I'm talking about the real interest rates. First real having to do with what is not reported but what is reality, and the second one having to do with the term real interest rates, right? Which means the difference between nominal interest rates and actual inflation, right? Because there is a difference between real interest rates and real interest rates, and the difference is the difference between the reported and the real inflation, right? If I heard right, our previous guest actually started his interview, if you paid attention, saying that inflation is not that high as it seems. It's a lot higher. In his opinion, he said it's about 10%, and I totally agree. And inflation has been much higher for, you know, for uncounted number of years, since at least since they changed the calculation of how they report inflation and how they adjust inflation, because for some reason we have a variety of tools and methodologies to adjust inflation, put that in quotes, right? Adjust it, supposedly adjusting it to depict reality better, clearly adjusting it to distort reality as much as possible. Okay. Okay. Any more questions, guys? My pleasure, Jason. Any more questions? Anything you want to look at? Amira must be really away today, since I've seen no questions from him. Oh, there he is. SCDG. Yeah. There you go. Listen. Now the question here is, if this was the corrective move, or this is part of the corrective move as well, and we are in some kind of a, more complex correction. The reason why I'm worried about the second scenario is because of the way we've rebounded higher so far, which is definitely not impulsive in nature, right? So we've had this bullish development by breaking out from this channel, backtesting it by creating some kind of a flag, moving higher again. So short to medium term, it looks bullish, but this complete lack of momentum to the upside, RSI is a testament to that, makes me worry that we might not yet have completed a bigger corrective move than the one we initially thought. So if I had to be something here, I would be long. Let me be very clear about it. But I would be cautiously long. AMD. Last time we had a look at AMD, we talked about the possibility of another leg lower towards 98, right? You can see why. And I think it's not out of the question yet. We have some kind of a corrective move here, which isn't necessarily over, although we did satisfy, last time we had a look at it, we said that we had one leg lower, we were probably building some kind of a triangle there, and we might have had another leg lower before higher. So theoretically speaking, we satisfied the minimum requirement here, which was one more low. We got that. We clearly got that, right? Now, have we actually found the low? We might have. We might have. In any case, there's no reason to be bearish other than short term, because there might be a little bit more of a downside. I would wait a little bit longer, but clearly against 98, the trend remains higher, and AMD remains a company that has very bullish fundamentals. I've explained it before. Of course, as everything, valuations have really, started pushing illogical levels, but you need to inspect that under the, in a comparative basis, meaning, everything is more or less illogical having to do with valuations. So the question is, are valuations in the case of AMD more illogical than in other companies in the specific industry? And the answer is probably not, right? So I think, it remains clearly in bullish mode. FSLR, that's my problem with FSLR is I have the same kind of skepticism involving SCDG that we saw before, right? The move higher doesn't have impulsive characteristics so far, and that leaves open the possibility for more downside before we can finally move higher. Yes, it's clearly bullish, right? If you look at the prior move, and we're going to be moving higher. The question is, are we going to be doing it from here or from, somewhat lower? And that's why I'm paying attention to this blue ascending wedge. Only if we break above it and we start showing some momentum, I'll then be confident in saying, okay, yeah, as it seems we did find a low and we're on our way to new highs, and then I'm going to start having like fib extension measures, and start looking for upside targets. Until that happens, I would remain more conservative here and staying sideline. What is this? Is this the one? Very little price action. Is this a new company? Seems to be bullish. I mean, we've had, I don't know what the news were behind this. We clearly had some news here. We had a big gap higher. We then held, we never closed the gap, right? We never filled the gap. We created a symmetrical triangle. We've broken above it. We are at new highs. It looks bullish. It trades in a clearly bullish manner. Next upside target 34.22. Yeah, the limited prior price action, doesn't give us a lot more information to work with. What's this one? Also, a rather recent type of company. Very choppy price action. I don't like this. I don't like this. I wouldn't be trading it. I mean, for no way. Probably lower in the short term if I had to bet, but I don't like this price action at all. Since this went public, it's been mostly choppy consolidations. Trade something else, if you're asking me. Definitely trade something else. I wouldn't bother having a look at it as even a second time. Yeah, this looks very, very bullish. At some point we might have a pullback. I remember last time we talked about it, I said that, listen, it's very bullish. That was clearly the corrective move, right? Impulse, correction, higher in an impulsive manner once again. But if you remember, I had mentioned that, can you really chase this up here? And the answer is no, you can't chase this up here. It's very, very bullish, but you can't chase it up here because there clearly is no risk reward in buying it, right? So the only thing that's left to do with this is hope for a type of pullback, like back towards, let's say, 590, that previous support area, and buy it then, right? Because it's clearly bullish. Notice we've started developing some RSI divergences here in the shorter term as well. So that's what I think about it. It's interesting. It's very bullish, but you can't really chase it up here. So hope for a pullback towards 590, and then sure, why not? What's this? Oh, whatever it is. Whatever it is, it's starting to go vertical, so it's really bullish. Yeah, so to begin with, look at this channel. Right. And that's when you know that something is really impulsive. So, we get at some point a pullback towards that level. That's your cue to go long. But, should you chase it up here? No, not because you can't make money but by chasing it up here, because it's not, it's not proper trading, right? It's not proper trading. It's FOMO. Natural gas. And the question is, where is it? Am I blind or something? There we go. And the question was from Laura, would it be wise to trade it, or might it go for another pullback? Listen, that was the opportunity to buy it down there at 380. We were talking about the importance of that support area. You could also have bought it at the breakout from 416, right? We also backtested 416 twice, and we've now tagged the 200% extension. Now, if the question is it smart to chase it up here? The answer is, it's very dangerous, right? Because at some point it might have a more proper pullback. But on the other hand, I've told you many, many times that I do believe that natural gas is headed much, much, much higher. And it's not necessarily the case that it will, be good enough to provide, great buying opportunities again and again and again. So, yeah, this remains a very, very bullish market. It has had mostly minor corrective moves, not a single deep correction since we bottomed out. Next upside target at 485 roughly. And clearly any pullback to 416 once we push higher should be a buying opportunity. That's all I can tell you about it. So it remains very, very bullish, right? Now, crude oil, on the other hand, is not displaying the same type of behavior. It's still within some corrective consolidation. My pleasure, Laura. Anything else, guys, girls? Okay, then. So I'll see you all again tomorrow. Have a wonderful afternoon.
Thank
Bye-bye.
you, Steve. Thank you, everybody.
Bye,
Bye-bye.
Stel.